Welcome to Orange County Power Players, where we spotlight the personal, professional, and financial success stories of OC's top leaders. Here's your host, Danny Flores.
Welcome back to OC Power Players, where I interview some of the most successful people in Orange County. I'm Danny Flores, your host, and today's honored guest is James Bohan. James Bohan is the CEO and founder of Stonehan Accountancy, with a truly unique outlook on personal and business finances. Starting with a deeply contrarian perspective that taxation is theft, his unique and somewhat controversial insights are guaranteed to deliver a thought-provoking discussion for us and your audience and our audience. With a diverse and accomplished background in real estate, finance, Big Four, institutional and family office, and entrepreneurship, there's so much trustworthy firsthand expertise here for us. As a fourth-generation real estate developer, he blends institutional quality with entrepreneurial creativity, offering a unique perspective on the industry. Welcome, James.
Yeah, that was a great introduction. Thank you for spelling all that out.
Yeah, so tell us a little bit about what you do and how your perspective on the approach helps your client base.
Yeah, I like to say that my dad was a real estate developer and my mom was a CPA, and I decided to be both. I think real estate is one of the best ways to generate wealth in the most tax efficient way possible. I was joking around yesterday with a client that I'm a dual citizen of Ireland and the US and was looking into ways to, not pay taxes. And there's a few ways to do that as a US citizen. If you move anywhere, they still tax you. There's places like Puerto Rico and the US territories. But, after analyzing my situation, everything, like in order to not pay US tax, being a real estate developer is one of the best ways to do it, since you're able to utilize a lot of depreciation and other benefits such as tax-free refinance proceeds to monetize your asset. That I figured out, okay, I don't have to expatriate to pay zero taxes. I just have to be a real estate developer.
Well, that's an interesting way of putting them both together, right? Mm-hmm. First of all, from what your mom and dad did to finding ways that combining them alleviates the tax burden. So tell us, let's go step by step. Tell us a little bit on the accounting side, what you do, and then tell us a little bit about the developments that you do and how you make that happen.
Sure, I'll go into more depth. So on the accounting side, that's ran through our company, Stonehan Accountancy, and our main specialty is tax strategy and tax savings. 99% of our clients are in real estate. Most of them run syndications or funds. So for some of my clients, I might be doing 10 to 20 business filings for them and one personal filing. Mm-hmm. And having a CPA that can understand the whole picture of all your moving parts is really important, because, you might have this one property you just bought, you're going to cost seg it. Your CPA needs to understand that to give you an accurate place of where your tax is throughout the year. So that's really our main specialty is tax for real estate. We do bookkeeping as well too. There's a big problem in the industry with having really bad books. Oftentimes inexperienced, cheap people are hired to do the books, and then there's all sorts of problems at the fund level where the property manager statements aren't really reconciled to the QuickBooks or the NetSuite or whatever accounting software you're using. Mm-hmm. So that's a big thing we're able to help people out with as well. We do a little bit of CFO consulting for a handful of clients. And then on the real estate development side, I'm originally from Orange County, where your power players are. I was born in Newport Beach, but moved up to Idaho about 4 or 5 years ago during the pandemic and started buying some real estate around here with the family. And then now I've moved on to partner with one of my clients. And so our strategy right now is like a lease duration flexible strategy. So, we're in Coeur d'Alene. It's a great hospitality market. So some of our assets are pure hotels, but then some of the other ones blend workforce housing with short-term rentals. So We just bought a 21 key hotel up in Sandpoint, and we're really running it like a workforce housing apartment right now as we get it stabilized. And we'll try 6 units on short-term rental, and the rest kind of weekly, monthly rentals for local workforce. And that's kind of our investment thesis, is finding cheap kind of studio rentals, like a hotel room is basically a studio, and providing that to these resort towns. So for example, Lake Tahoe, all their service staff usually has to drive like 45 to an hour and a half in, just because there's no attainable or lowercase a affordable housing in Lake Tahoe. We're seeing the same things here in Coeur d'Alene and Sandpoint, where the housing stock just doesn't exist. So we're, playing with the lease durations, doing furnished finder, and we're renting out basically what we call micro apartments, where we take maybe like a single family home that's 4 bedrooms, get rid of all the common space, make each bedroom its own studio rental, put a kitchenette in there, and then that way it's not like a college roommate situation where you share the living room or share the kitchen, you complain about the dirty dishes to your roommates. So we found a way to rent by the bed and essentially create enhanced yield, because like buy wholesale, sell retail, you buy one big property, even a single family home, and then you sell it retail by the room. And so we're able to achieve outsized rents that way, and then also provide some much needed workforce housing in these markets.
Well, yeah, no, that's a very interesting way of doing it, because I would bet you're increasing the yield so much on those investments by breaking them down. Now, is it hard to find? I would imagine there's smaller properties. You're not buying 100-unit type of properties. Is that correct?
Yeah. So, I mean, it's not that hard to find deals, but, we're deploying capital $500K, $1 million at a time, instead of a fund going out and buying $5 to $10 million properties that might be those 100-unit levels. So it does require more of a operational overhead. My partner and I on this are fully integrated. He has a full GC team and property management. For the ones that are closer to me, my wife and I have been handling the property management of those. So it's kind of interesting, coming from my background of being at the Big Four with KPMG, and then being the CFO of a private equity fund and doing, $100 million, $150 million loans, or working on these $1 billion funds. I really had to humble myself when I came up here to Coeur d'Alene, and that's really not the market. There's, maybe a handful of those 50 to even 200 units. And the opportunity is in really the small stuff that we're seeing. And I've come to enjoy it a lot more. And when you do small deals, you can own a bigger percent of it. When you're just the fund manager, you really own, depending on how much equity you have in, your really only ownership is equal to the promote or carry that you get at the end of the day.
Right. That is true. Yes, you have to wait for that to hit. So that means the deal has to operate really well to be able to get there. But I guess doing it the way you're doing it, you're controlling your destiny, right?
Yeah.
Now, and that's kind of not a bad position to be in, right? So now on the accounting side, how difficult is it for you to continue growing that business? Do you want to just stick with the real estate side, or do you want to expand into being able to do the tax and the taxation and bookkeeping for other industries as well?
I really want to keep both, and I have a few reasons for that. Is one, the accounting firm right now has been one of the most profitable things for me, and so it's paying the bills. And a CPA firm from an entrepreneur's or business owner's perspective is a great kind of company to have. Clients are usually pretty sticky; they stick around. And then it also provides like the back engine for my real estate endeavors, because there's always accounting and tax needed for everything you do in real estate. So instead of having to be a cost center for a lot of people, I've actually turned this into a profit center. And, the time demands do add up across the year. Luckily, the tax practice is a bit seasonal. So, up through April 15th, I'm grinding. And then now I have a little bit more time to focus on the 3 renovations we're underway on. And then also, by having the CPA firm and not just being like, let's say, a real estate fund manager, I don't have incentives to just do a deal to pay the bills. There can be sometimes a misalignment of incentives for like syndicators and fund managers to go out there. Like, hey, we have all this capital. We're getting paid to deploy capital. We're going to deploy capital,
Right.
and
Yeah. Yeah.
my dad and I joke around like, is the project feasible, for the syndicator, or is it really feasible, as a project in general? And so having
Right.
a CPA firm, helps me pay the bills so I don't have to go out on a limb to make an acquisition, to get the acquisition fee, to, keep the team together. And we can
Right.
operate pretty lean on the real estate side with other income coming in.
Right. And that would so you guys bring in investors into the deals?
Not right now. We've been doing it all on our own capital.
Okay.
Partner says if you keep it small, you keep it all, which is an interesting perspective.
Yeah. Well then being able to kind of keep everything lean makes it even better for you guys because it's more to the NOI for you guys.
Yeah. Yeah.
Right.
The firm is great because I was able to meet, my partner on these last couple projects by being a CPA for a year. I got to know him. I got to see the way he operates. I got to see his finances. Everything was above board. And like, this is someone, I can trust to go into business to. I have a few other clients that my family have invested in as well. And it also, creates an aspect of a really unique due diligence platform for working with other real estate syndicators and operators.
Right. Right. I would assume that, right? You get to see how they operate and you say, okay, I like the way they operate, then that'd be someone that I would consider partnering with.
Mm-hmm.
So what comes easy to you that might be challenging to others that makes you be unique in who you are and what you do?
I think it's just kind of my background and just spending the years at the grindstone. I was talking to my marketing team about like making content, and I'm like, wow, I can really talk about anything from my career because, I have 15 years of experience as an accountant and then more in real estate, and not everyone does. And so I can really bring a unique perspective to people. And that's why I've, been working with my team to help create more educational content, just given my unique background. With this training of, helping to start companies, growing a fund, I was just really in some unique positions where I can share the expertise I've learned.
So if there's other syndicators out there, and one of the things that you mentioned was that a lot of times they don't know how to tie their books or reconcile, and things aren't correct. If somebody is in the business and they want to go out and find somebody to help them clean things up and do them correctly, what would you recommend should be the process, and what kind of questions should they ask?
I'd say reach out to your network about other CPAs that your community is using. We're able to help provide this service. I'm available on LinkedIn at James Bohan CPA, MRED, and stonehan.com. That's stone like a rock, Han like Han Solo. But there's plenty of other good firms out there. Make sure you're really working with the real estate specialist because there are, a lot of nuances for this business. So, for example, like something as simplistic as making a mortgage payment. Well, on an advertising loan, some of that hits the profit and loss statement, and another part hits the balance sheet. Classifying things correctly, capitalizing expenses, and the way you categorize things, really drives the bottom line because everything's based off of capitalizing net operating income. So if you have a higher net operating income, you're going to get a higher valuation. So when you're looking into categorizing things like, okay, well, is this like a capital improvement or is this a repair? Repairs will drop your income, capital improvement will increase your basis. So there's some nuances there that really help make sure you're running a tight ship and cleaning the books up that can really drive profits at the end of the day through valuations that you either sell or get a refinance against.
No, that's really good information for somebody who's in the business, because a lot of times some people don't know what to do or who to look for, what kind of help to get, right? And knowing, maybe they can contact you or whoever else that maybe their friends are using, and that would definitely help them get clean books. And that's important also because we have investors that we have to answer to, and we have to disseminate information, and we want to make sure that the information that we send to them is actually accurate. And the only way to keep it accurate is by keeping clean books.
Exactly.
So that's super important. Yes. So what has been one of your biggest challenges in your career as you put all of this together in motion?
A few challenges are, one, having patience. Rome wasn't built in a day. It takes some time to be in the business, develop the reputation. And there's this phrase, success begets success. You start being successful, it leads to more referrals on the accounting business, or it leads to more potential lenders, partners, broker opportunities on the real estate side. So I think just having patience. One of the more challenging times for me was I was working at KPMG while finishing grad school with my final exams and their version of the final thesis. And then at the same time, I was being hired by the private equity fund. So I was helping them get all their PPM LLC books done. I was working till like 6 or 7 a.m. finishing my thesis. And then I still had tax season at KPMG to contend with. So that was a really challenging time in my life, just balancing all those. But that kind of led to the confidence, like, hey, if I can handle that, then I can really handle almost anything. And, all the work I have on my plate right now across a couple businesses.
Wow, no, that's definitely interesting. And I think we've all had challenging times in our times. At one point or another, this isn't an easy game. Being an entrepreneur, being in the real estate business, it has its good times, but it also has its trials, times of trials, or you got to figure it out and get through it, do whatever we have to do. Yeah. Now, as we wrap up our interview, we're into second quarter of 2025. What exciting plans do you have for the rest of the year?
Ooh, good question. First week of June, I'm going to go check out Brandon Turner's REI Summit. We're sponsoring that one. That's in Austin, Texas. So looking forward to that. And then I'm really excited to be getting these renovations done. My partner works super quick, super fast. We bought this one property in March, and he should be done with the renovations by the end of June, or by the end of actually this month, May, to start in June. And the other duplexes we bought, all the tenants just got out, so that should be done by the beginning of June too. So just kind of seeing the fruition of all the money we're paying out starting to come back in as rental revenue. That's an exciting prospect for me this summer.
Yeah, no, that's exciting. Yeah, exciting, and that's fast. Getting all the renovations done so you can get the properties rented and people in there and get that cash coming back. Now, thanks so much for everything you've shared, your tips, and all your knowledge. And I know you mentioned it earlier, but let's mention it again. If somebody's listening to us and they'd like to get a hold of you, how can they get a hold of you?
So I have a book a call platform on my website, www.stonehan.com. That's stone like a rock, Han like Han Solo. I'm active on LinkedIn and Instagram. You can find me on LinkedIn, James Bohan, CPA MRED. And my Instagram is James Bohan, CFO. And I'm posting a lot of great business, tax, and real estate tips out there for people to learn from.
Well, thanks so much for sharing, James. And to our audience, thank you so much for coming. And please go to our website, ocpowerplayers.com, and follow us on your favorite channel. Thanks so much, James.
Absolutely, Danny.
Thanks for listening to Orange County Power Players. Want to share your success story? Apply to be a guest at ocpowerplayers.com/guest.